Makes a awesome setup. You can see here. Alright guys, before I go over today's recap of my trade today, I want to show you something so my trade will make a lot more sense to you. Talking about my market psychology. So whether you've been trading for a long time or you just got started trading, you should know the very basics of the fact that only person that can push stock higher or lower in large amounts are institutions, right? Only people that can make a stock obviously over here up and down drastically is institutions. All right, so what these institutions do, right, because they're trading at a much higher volume than us, even hundreds of thousands of shares, million shares, whatever it is, right? If they have, a million shares, right, and they want to add to their position, right, and they want to buy the stock at a lower price, what they'll do is they'll take a fraction of this large position, and you'll see it a lot of times right at the open is they'll sell not all of this position but a big chunk of it, enough to move the market down, which will bring in the panic sellers. What they'll do this for is because they're trying to buy more, but there's not enough people selling for them to do that, right? So what they do is they force the market down, creating more sellers in order for them to actually come in and buy more shares, and they're going to get it at a lower price. That's why you'll see the market drop first 30 minutes and then take off right after. It'll also do the same the other way. You'll get the first 30 minutes, they'll buy, force the stock up. That way they bring in retail buyers in order to take the opposite side of their trade, and then they'll start dumping their larger position, and you'll get this kind of thing going. All right, so keep that in mind. I'm going to put this to the side, and I'm going to show you my trade on 5 below today. FIVE is the ticker symbol if you're curious. What we're looking at here is a 3-month chart. Right here, yesterday was my buy signal, so I wanted to get into 5 today at the right time. I'm going to break it down to today in 10 minute. Usually what I trade in, intraday chart, 10 minutes or 5 minutes. Just kind of ignore the colors on the side. This is just pre-market and after hours market, the purple and green. But you can see right here, as soon as the market opened, we got this push in price down, and then we broke above the 9-period EMA, and this was my buy signal. I was able to get in here. I believe 5 was up just 68 cents. I ended up riding it out until we came up into this area, kind of hitting the high of the day for the third time. I didn't want to take the chance of it pulling back on me, even though I did have a trailing stop. I got out of this position, and of course it ran up all the way up to a positive $5 a day. I think I sold it. It was up like $3.50 on the day when I sold it, and it ran all the way up clear up to $151 at the close from the open at $148. Well, I could have made a bit more money if I was a little bit more patient, but that is my trade. And to give you a better idea of what this looks like, a better graph, UPS actually did this twice. My keyboard has died on me. Okay, UPS did this actually, and we'll give you both examples on UPS. It did both the last couple of trading days. Makes a awesome setup. You can see here, as soon as the market opened, it's like, man, why is UPS down when the market's up 500 points and Christmas is coming up and everybody's shipping stuff, right, from Amazon and all over the place. Institutional investors sell a big chunk of their shares, force the price down, creating retail sellers in order for someone else to take the other side of the trade, and here they come back in, boom, 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 force the stock right back up. What you would have waited for is that first 30 minutes, that pullback, that break above that EMA. I mean, you can get in early down here, but I don't like to take that kind of chance. I let it break above my moving averages before I actually enter the trade, and you could have rode this thing for, what's that, 163 all the way to the close, or if it dipped, even if it dipped below the 9 period here, 167. So I mean, you're talking about a $4 or $5 run today. And imagine, you know, if you had 10 calls on that, you would have made out pretty well for a Monday. And I'll show you the same example of what I showed you on my notepad earlier, with the opposite effect. Here you see retail institutions pushing the stock higher in order to create more buyers for them to take the other side of the trade, and then they sell and dump their position and force the stock down. But that is my recap on 5. I just had one contract on it. I made about $100. Not too bad for a one options contract in a Monday. Just taking small trades right now as we come to the end of the year. But thanks for coming by for another video. Hope you liked it. Smash that subscribe button. Drop a comment.
This some serious gourmet shit.